Now, political tensions between China and Britain have led China to temporarily suspend listings on the Shanghai-London Stock Connect scheme. That's according to 5 sources who spoke to Reuters. All 5 of the unidentified sources, though, including public officials and those working on the deals, said politics was the reason behind the suspension. 2 of the sources said this included Britain's position on the Hong Kong protests. Huatai Securities was the first Chinese company to take advantage of the Shanghai-London Stock Connect scheme back in May last year, raising over $1.5 billion in London. China's SDIC Power was next in line, due to list in December under the scheme, but that deal was postponed. The 5 sources allege that this was due to Beijing's suspension of Stock Connect. The suspension, even temporarily, will bring uncertainty to both partners, though. Brexit concerns as well, they continue to weigh on UK markets, with London seeing its lowest IPO volumes in a decade in 2019. Chinese investors will have to look elsewhere for investment opportunities, while domestic growth continues to decline. For more, Ollie Barrett joins us live from London. Ollie, this seems like a move that could financially hurt both sides.
Well, certainly both sides heralded the scheme as something that would financially benefit them, and so it would therefore seem logical that both sides will be harmed by this move financially. Yes, it was always designed to be a scheme that would also boost relations, boost ties between Britain and China, seen as an important step in opening up China's capital markets, an important step in giving mainland investors access to UK-listed companies, helping Chinese firms try and expand their investor base as well. So a number of reasons that this will cause potential financial harm to both sides. It also means, of course, that any listings that are in the works at the moment will also have to be put on ice. So bad news for those companies who had been working on those listings, and also bad timing. That idea that the LSE here in London has had a difficult year in terms of business when it comes to new listings, partly because of political instability, partly because of Brexit, clearly not going to be helped by this news. And also at a time when Britain is leaving the European Union on January the 31st and looking to expand businesses and links overseas beyond the European Union. Clearly bad timing when you look at it through that prism as well.
And Ollie, how will London react to this report? What can we expect of bilateral ties, perhaps in the immediate and medium terms?
London always reacts carefully when it comes to episodes in its relationship with Beijing like this, and I think we can expect a pretty circumspect reaction this time as well. No actual comment yet from the Treasury here in London or from the Foreign Office on this news, and we may well not get one depending on how long this temporary pause goes on for. Certainly, we also have to remember that Boris Johnson has just won a general election here in the UK. He is very powerful now domestically, but certainly investors and diplomatic experts are looking now to the Boris Johnson government and not entirely sure about how exactly it is going to try and handle relationships and relations and ties with Beijing. So that adds an extra air of uncertainty to all of this as well.
All right, Ollie, thank you very much for that. That was Ollie Barrett there in London.